Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, February 21st, 2024, and this is Blockhead Traders Weekly. In this week's episode, Viper is back with me this week, and we got three topics to cover with you today. The first one that we're going to touch on is just an update on a natural gas futures trade that I've got going. I broke a few of my rules when I entered this one. A little bit of FOMO got me into it. We'll show you how it's going real briefly and quickly. And then second, AI. And I thought, well, why not participate in this AI world with a little bit of NVDA earnings? And in my typical fashion, I sold premium on this thing and I went with a strangle. So despite, bulls, bears, I'd be pretty happy if we go nowheres. So we'll check on that trade. Flappy Bird, that went live today and earnings were today. So we'll get a good update there. Then we're going to check in with Viper, who is always practicing that price action. He doesn't really care what on earth is going on with the underlying, any of the fundamentals, sentiment, any of that stuff. He's just looking at the price action. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, or some of the other Blockhead traders. We'd love to hear what you're trading. We'd love to hear what type of content you want to hear about. You'll also find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. And if you can't find it there, let us know and we will get it there. But let's hop to our content this week. So, Viper, it's been a little bit since we've had you around, and it's earnings season. So I've kind of been dabbling in different bits of earnings. And last week, actually it was the week before last week, I started on a Friday. I pay attention to futures here and there, and I kind of always look for volatility kind of creeping up or some good premium selling opportunities in there. And one of the traders pointed out natural gas, which is a commodity that I've traded in the past. And it had a massive gap down and was kind of sliding, and it had been on just a massive slide. And what happens when that goes that way is volatility starts to pump up and creep up. And I wouldn't say that it was really at, massive volatility levels, but it was really kind of struggling with just finding a trade to take. And in the futures world, everything was kind of ripping, doing well. Volatility is relatively low, so there really wasn't much to have. And natural gas was really getting close. And I mentioned to the particular trader that brought it up, I said, I think I'm really looking for natural gas to drop down to around the 150 mark. And then I'd probably go out to maybe, a 20 or 30 delta and sell that. And this particular trader was very interested in natural gas. And he says, I don't know, man, this has just really come down. And I said, yeah, you're right. It really has kind of come down. And it was just an ever so slight tick up on that particular Friday. And I mean, natural gas is really, I won't say at all-time lows, but at very, very historic lows. And so I said, well, let's go ahead. Let's roll the dice and throw some out there. And so I went out to the typical, 16, 20 delta on the natural gas. And I just wasn't that impressed with the premium. So I said, well, you know what? Let's really bring this thing in. And this is where I kind of broke one of my normal strategy rules. And I didn't stay that normally on a one-sided trade, I was going to sell a put on this, looking for a turnaround, looking for it to go up. And when we get so far down on there, I don't like to do strangles unless we're kind of maybe more in a middle zone area, especially in commodities, because those things can rip to the upside real fast and just blow through your call side strikes. So I was only going to play it one-sided. When I play something one-sided, I'm really looking at a 20 to a 35 delta. Is usually where I sell. So I ended up going right at the money with a $1.85 was where it was trading that day. And at the money is almost a 50-50 coin flip when you get to probability. but the premium was pretty decent and it was in the sweet spot of days to expiration. So futures really get fast decay when you get into the under 14 days to go. So these expire February 26th. This is about that, just entering that 2-week period. And so I decided to jump in. And this is what we look like. Not that amazing. So this red box is basically my 185 strike that I sold. The first where it starts is the day that I sold it. You can see there was a couple of green candles there. I put this on 4 hours so you can see a little bit of granularity in there. And this thing went red, red, red. And I was really just kind of holding out, pulling in here because I said, you know what? My original target was around 150. And then I was going to sell a delta below that, looking for a turnaround. Ironically, this thing dipped down to like 154, didn't quite hit 150. And we started kind of stabilizing out a little bit. We got a beautiful rip 2 days ago and another continuation up. So I'm still red, but my premium's really coming off. I'll be in a good position to roll this thing forward as we get closer to expiration. With this particular future, early assignment's not an issue. It's traded as European style, which basically means you can't get early assigned. You only get assigned at expiration. So, that's where this one's sitting. Not that wonderful, but not terrible. All right, so next trade I got is NVDA Earnings. Now, this was almost like, I'll call it an impulse buy. So again, looking through different premiums, all the media was talking about NVIDIA, Magnificent Seven, all this tech stuff, earnings today. And I said, you know what? I was sitting at a quick break I had, looked down, I said, what's the volatility on this thing? And where is that on a percentage basis? And I looked real quick on my mobile trader because earnings were today after the bell. This was right just before the market opened. And I was like, whoa. NVIDIA volatility was around the 90th percentile, 85th percentile, something like that, historic. It was around 170% volatility for this week's expiration, expected move of like $70+. And it had been so parabolic. And if you look at the RSI and kind of where it is, I said, this doesn't look so bad for a strangle. So I kind of priced out like a 16 to 20 delta strangle. Because volatility was so big, I decided to try to pull in the wings a little bit and look at the 20 delta, which is a pretty aggressive strangle. Usually I would like to go with a 16 delta on each wing. And so I realized I could collect about $18.20 on that strangle. With about 6.8K in buying power, which is very, very equivalent to a futures ratio of premium to buying power. So I went back and forth because the biggest thing for me before I sell a strangle is my rule is you have to be okay with assignment, because assignment is a very real probability or possibility going into earnings. And believe it or not, I was actually more concerned about getting assigned on the low side than getting assigned on the high side. So I just really feel, this thing's trading at like 90+ times forward earnings. It's priced to just crazy growth. So I went out with my strikes. I'll throw them up here on there. I went with a 615 short put and a 780 call. Now, I collected $18.20, which is almost $2,000 on this, and this thing expires on Friday. And the one interesting observation, I've never really collected this much premium this short to expiration before. And throughout the day, NVIDIA really didn't go anywhere. So I put this trade on about 10:30 this morning. And then throughout the day, the price moved a little bit, but by about 1:30 or so in the afternoon, I went and looked at my holdings, and I had gained $200 simply in time decay from 10:30 to 2:30 in the afternoon. And I can tell you that was just time decay because the volatility on the option chain really hadn't changed, and the price really hadn't changed. So it kind of makes sense, because when you got $2,000 in premium, that has to go to zero in 3 days. So you got to decay that thing pretty stinking fast. So what I put on there was my Flappy Bird trade, as I call it. So if we flip over and kind of look at that Flappy Bird, this is where we stand. So the end of this box is where the earnings will end. That's this Friday expiration. The earnings announcement was today after the bell. The low side, this is my 615, 780. This big green candle right here, this is the earnings announcement. So we rocketed up right there after earnings. We hit this about 749 mark. I think 750 is kind of the previous all-time high, which it was really dancing around in the not so distant future. So anything can change pre-market tomorrow. Anything can change when it opens. But I really like where I'm sitting because in the price action after hours, yes, we rocketed up, but we ran into resistance. We fell off. We're going back to challenge it again. And we got a decent amount of margin of error before we start hitting my strike. My break even for this is, close to $800. And so honestly, I'm okay getting short up there at my break even. And trying to hold this thing and ride it out, do some rolls, because there is some crazy, crazy call skew in NVIDIA. So the calls are definitely more expensive than the puts. So that is this trade that I put on. Hopefully we get something pretty decent tomorrow that it doesn't really go anywhere. Hey, did a little right down the middle, and we can conquer this Flappy Bird level.
So that's still your normal earnings approach, right, on NVIDIA? Or because of the call skew, are you hoping to hold on to it longer? Or is it still sort of a close it up tomorrow if the volatility bleeds off?
Yeah, this will be standard play. So standard rules apply. When the market opens, I'll be looking to close this out for 50% of my premium or more that I collected. So, have an order out there to close this thing out for $10 or less would be my target. I do believe if it's anywhere near this current price point, that should be very, very feasible. The call skew, honestly, I like that because I don't really like it, but it gives me more comfort because if I actually had to roll this thing, I would wait to the last minute, right, to roll it. And there wouldn't be much time premium left. So I would buy it back relatively cheap, or at least just the intrinsic value. And then when I sell the call in the future, the premium will be pretty thick with that call skew associated with it. So makes normally rolling the call side is extremely difficult and painful because you really can't get much premium out of it, because most underlyings have what's called put skew, because it's usually used for kind of downside risk protection. And so there's more premium to the downside. And so it gets real kind of like pinching pennies to try to roll the call side. So Viper, that's what I've been up to these days. I know you were away last week, but what have you been up to in the market? Making any trades? You kind of sitting it out, just standing by, reading the Jerome Powell minutes? What's up? What's going on in your world?
Well, a couple things. One, I haven't mentioned to you yet because it just happened today, but you tend to be a fan of these types of announcements. So my VTI and my VOO ETF index strategy, I've closed it out.
Uh-oh. Dun, dun, dun.
Get
ready for the dumperoony.
Yeah, right? And it wasn't like a super, it wasn't like I didn't put a ton of effort into the chart. It was more of like, all right. So, and this is, I don't know, slight tangent or whatever, but for those who have watched for a while, I see all 6 of you, that I've had this strategy of buying the index ETFs, the VTI, the VOO, which represents the total stock market, and VOO being the S&P. And so I've DCA'd them, like almost 2 years now. Yeah, coming up this summer. And a couple times now I'll get up enough in profit on all of these daily buys that I kind of want to try to catch a a price action swing, take the profits, and then also cycle that capital back into the pot, and then keep those DCAs again rolling again out of that pot. Ideally, it's simple. You buy the bottom, sell the top, that kind of thing. So I'm
Oh, that's what I'm doing wrong.
right. So I'm attempting to, near, I don't want to say top. You don't call tops, you don't call bottoms. But when profit needs to be taken, I'm trying to close these things out. And then, like I said, cycle that capital back around, and then we just start pecking away again every day. And hopefully, I time it to the price action, and then we start dropping, and then I'm DCAing in. So I did that today. I closed it out. And some of it, like I said, it wasn't a complete read of the chart because, we're pushing all-time highs now. So that was part of it. I talked about it on the previous episode that I had done a lot of DCAing in the wavy part of the chart. And, I was up 15% on both of those positions. So felt about like the time, and there was a little bit of a failure on a higher time frame. So I was like, all right, let's do this. And it's a long enough time frame that it's going to pull back at some point. So I'd rather have that capital recycled. And I did increase the daily buy just to build it back up as we hopefully retrace. But we'll see. But it's been a decent bellwether so far when I do this.
Well, that's exciting for me because that means that we got the old fall off a cliff coming up soon, which means we got some volatility that'll come back, and I can start selling some premium on those indexes.
Yeah. So, maybe by the time this video comes out, everybody will be like, what's he talking about? Everything dumped. What's going on? So, but speaking of volatility, the other thing I've been doing is obviously trading in the crypto lands, the Bitcoins, and all of the fancy schmancy stuff. And kind of I've been really, really focusing pretty aggressively on, like you said, the trading the TA, the price action. And it kind of started, I've hinted at it on the show when we were approaching the Bitcoin spot ETF approvals. And I kind of showed how somebody off the cuff was like, oh, what do you think, what's going to happen with Bitcoin and the ETFs? Are we going to go to 70,000? And so it kind of started there where I did a chart, and I shared the chart that I had done at that time. And then I kind of followed that chart, not taking any trades on it, but just following it and just sketching what I don't want to say what I thought was going to happen, but it was more of like sketching the probabilities, sketching here's where the price is at. Here's the two choices, obviously it's up or down, but when and where are these choices relevant and whatnot. So I started doing that, and then that actually was panning out really well, which built confidence. And so then I was like, well, this isn't worth anything, literally, if it's just putting sketches on a chart. So I've been rolling that forward into our show favorite crypto coin, AVAX, Avalanche. So let's hop over into some charts, and I want to just show, hopefully quickly, kind of what I'm talking about here. So this is Bitcoin, and I believe I showed this chart around the ETF. So the ETFs were somewhere around this middle chunk here. I believe it was this section of candles down here when I mentioned that somebody asked me what's going to happen, and I drew this now green arrow as I was like, look, I'm not going to get into where this range came from up here, but I drew this range, and I was like, all right, look, I honestly don't think we're breaking through that. This is a huge critical weekly range. So I was like, I think we're going to go up, touch it, and then we're going to come back down. And that at the time was the most probable move. So I just kind of, like I said, threw that sketch on there. And then at the same time, I was like, well, if this move doesn't happen, then the probable move is this yellow candle, or this yellow arrow of we lose this range and then we drop down to the next range here. So currently the chart is rewound in time. And I just kind of left these on here. So when you're practicing your price action and your TA and stuff, I highly recommend jump into a chart, throw a bunch of these things down, read it. And if you happen to remember to check on it later, awesome. But just, it saves everything on there. So just leave it. And then you stumble back on it later and you're like, what the heck? Like this, it was either great or terrible. So if we let this kind of run forward in time, we can see the green arrow. I intentionally was pointing at the top of this range because I was like, all right, we're going to go up here, but then we're going to pull back. And we could have possibly bounced back off and then gone and conquered this range up here. But the fact that when we dumped into this range below, I had told the guy that was asking me about it, I was like, this yellow arrow, that's becoming more and more probable. So as time went on, sure enough, it was weak, and then there it was. And so the way I chart this in time is I go, okay, so now this happened. So we're going to turn this to a green arrow to be like, yep, that was confirmed. And so as time goes on here and we started coming back up, then again, the question was like, oh man, what's it going to do? You called that and that. And again, this isn't about calling it. It's just about acknowledging what's important and what's probable. So about this time here, when price was here, I was like, all right, well, here's the most probable moves. Oops, grabbed the wrong thing. Here's the most probable moves. The most probable move is, hey, we're coming up from the bottom side here. We could reject. And if we reject, that's a lower low from what we already had. So not all at once would we do this yellow arrow here, but the probability would be that we'd lose this range because we didn't gain anything when we tested the top of this range. And so eventually we'd work our way back to 31,000 here. Or I drew these blue arrows of roughly one of these patterns where we pop up and we gain, we come back a little bit, and then we start tearing back up upwards, or maybe we fiddle faddle around a little bit like this second arrow. And so about this time I drew these probabilities. And so playing the chart forward, like, hey, look at that. We popped up, we fiddle faddle around, and then we gababoosh, we take off. So jumping forward to the end here, that was just kind of, how this played out, and then we gained this top range, and that's where we are today, is up above 50,000, as probably anybody even not in crypto has heard somewhere along the way. So this built a ton of confidence for me. I didn't take really any of these trades, and I was like, all right, well, this was like everything just kind of clicked here of like this price action's making sense. The reasons I drew the things I did make sense, all that kind of stuff. So took it over to, like I said, our show favorite coin here. And this was, so I'm just showing right now, just historically, the whole year of 2023, this token, not just this token, but just crypto in general, has just been very like there is nothing. How do you trade this chart? Well, the short answer is you don't, because this is just junk. So what's been exciting now at this intersection of just hitting the gym and practicing those charting reps and whatnot is now things are getting exciting, because if we slide over here and look at AVAX, this is a much better chart to trade here. And this kind of goes a little bit to what you always talk about, Sprocket, with volatility. This is this chart back here, not volatile. This is just you come forward over here and like, all right, we're popping around. This is where it gets exciting if you can stay grounded in these firm rules of TA and PA, and there's a lot of opportunity here. And so that's essentially what I've been doing. So I want to talk you through just a couple, just really, still an open trade that I've been doing, but I feel like because of the volatility and the volume that's been happening, like there's just some really clear patterns that have set up, and it's not trading the pattern, but just identifying when something yields a good opportunity. And we could kind of see it already on this chart here. We had this big move up to get a new local high, and then obviously we were pulling back. And what I want to really kind of drive home is the importance of a move like that, where you have a big move up, which is fine. We're not necessarily talking about how to trade that, but when you have a big move up and you pull back, that's where a lot of opportunity opens up of like, when do I go long or when do I go short and all this kind of stuff. And this pattern right here of dipping down, catching a new low, coming back up, gaining it, and then holding it, is the sign of a reversal. And you can see it on all sorts of different time frames and whatnot. It's a little hard to see here, even on the 4 hour. So if we jump back to the daily, this is where I started really honing in on the current trades that I have open. Now I hope it's a little more clear as to, you go up and then you can see this was technically a lower low here. So, the short opportunity was around here to short all the way down to this low. I didn't do that, but it hopefully is easier to see the pattern I talked about, where we came down, got a new local low, came back up, and then held it. And this was the reversal of this pullback here. So currently the trend is up. And so I actually caught this one. I got in, I think I have to see it on the hourly. So this gets a little noisy with the candles down here, but no, we won't do that. We'll stay on the daily. So somewhere around here, I had gone long because, again, we dipped down. There was actually a much smarter long to take down here, but it's very nuanced to catch that moment. So I actually went long here. I caught this, and I think I sold off that long somewhere around up here. So great, that was a good win. Again, building that confidence. And I actually, so I shorted at the same time as when I closed that. So I'm currently short. That's the open position on this. But to put a little more technicals, I guess, this is the important range for the current pullback. And so I want to walk through just quickly why it's the important range. I drew it from the daily chart here. Again, this move down is the move that made this local low. So that's the move we really want to focus on. And if you're in a reversal, what you want to do is gain it and then not lose it again. So clearly you can see that we gained it. I've made the range kind of specifically the way I made it here because we had the candles, the top of the candles here that started the failure, started there. And then we had these two previous attempts to try to break through this critical range and turn and gain the range, and we failed. So it was actually these two that I spread the range on, because it was essentially, we've tested from the bottom on this first one, we failed, and we came back down. But when we came back down, we didn't lose anything that we did down here. So that was a positive sign. We came back up again. We put in a local high, but again, we still didn't break through the range, but it was still a positive move for the reversal thesis because it was a higher high. We failed. And then it was like, all right, like, I don't know, some underdog in the fight, like reeled back of like, all right, I'm going to do it again. And when we reeled back once again, we did not put in a lower low. So again, that's a positive sign. So then we rallied at it again of like, all right, let's go again. Boom. And we popped through. So we popped through and we just ran. As you can see here on the daily chart, it just ran and it went and put in this new local high, a very nice local high, well above the range. However, the reason I liked the short so much is because of this push through here. We did this test from the bottom. We did a second test from the bottom, but we ran through this so fast. We didn't come back to test from the top side to make sure that we have the support we need to hold this range. So once we started getting these failures up here, and they're a little more clear on the 4 hour, but we don't need to get into it. Once we started getting those failures, it was around here at $40. We started losing the $40 mark. And so I was like, I really like this short here. And so, I did, yeah, I had more help on the chart there, but, I like the short from $40, and I guess we will go into the 4 hours because it just makes this make more sense. We didn't need to hold this range up here. We wanted to for super strong uptrend momentum, but again, like I said, we could pull back and test the top side of this range and still be good in the reversal and confirm this, and that's where it's at right now. This blue line was the same charting thing. This was actually the line that I made the short based on. I was like, I took, there was a long setup here at $40, as we pulled back, and then you could put a tight stop loss below this range. But I made this blue as the probable move to the downside if we lost this range. And then sure enough, in one fell swoop, we lost that range, we pounced back up, and then that's where the short kicked in, and then that's where we are today. We pulled down, profit target on the top of this range below, but the short is still open, because even though we finished this down move, we still need to start gaining something now. So that's where it's at now. So kind of rushed through it, but that was kind of where my head's been at, is just, well, if it doesn't make sense, that's fine. It doesn't need to click. It's all about just throwing some stuff on a chart. Don't trade it right away. Throw some stuff on there, practice it, see what happens. Maybe you got it, maybe you missed it. If you missed it, what went wrong? Even if you got it, what went right? Why did you get it? And so I'm just kind of trying to really drive that home. And I'm at the point now, like I said, the Bitcoin chart was very confidence building, but there's nothing like skin in the game. And so this current batch of trades is to prove that skin in the game. And what's most important emotionally, I think, for me, is that this short trade worked out the way the PA says it did. And that's because, we mentioned this token a lot, which means there is potentially confirmation bias on, regardless of my swing trades, I have a large portion of this token that I want to just hold long term. And so I think that's really important, to try to shake up that bias of like, yeah, I want this thing to go to the moon. I want this thing to go really high, but I also want to make sure I'm not afraid to short it when the moment arrives. And so this was kind of an exercise in both those directions of practice a TA, and then also let's challenge the emotional bias and make sure that we're sticking to doing what the chart says. And it's working out so far. But it also, you don't need to be on one thing. Like, I should very much be rolling this into other charts, other stocks or tickers or tokens or whatever. But at this point in time, it's working, and I'm just going to keep practicing it and playing it out.
So talk me through there at the very end where you got, you picked up your short there, I think around 40. If you have that idea that you're going to hit this range and you're either going to reject and gain, or you're going to go through it and lose more, what's the logic to keeping the original short open versus a newer trade, kind of locking in your profits within new stop losses, or wait for the move before you get back in long or short?
So you mean like scalp this move, close 100% when we touch down here, and then wait to see where you want to go?
Yeah, either that or scalp the move and then open up a trade in both directions, right? With a tight stop loss on one side or the other. Like what's the logic? Because if you're not closing the short because you want to see if you start to gain, don't you eat into your profits once you start to gain?
Yeah, you definitely do, and that's part of the reason why you want to make sure you set a profit target that's worthy of the initial scalp move. So This is also going to be revealing this is like the next phase of what I need to do as far as to be better disciplined here. Busted. But we talk a lot about like the 4-to-1 risk to reward ratio or 3-to-1, whatever ratio you want to settle on. 4-to-1 is really good. And it's what I want to strive for, but I'm still not regimented enough to where I'm more interested in taking trades right now that confirm the move I expected it to make. And I'm not going one step further and really evaluating the risk to reward here. But what I mean by that is, so my short was on the return here, and I think it was 75, 38, yeah, somewhere around there. It might have been 38.70, but nonetheless, if we do our short position here, and that's not exactly where I was, but we'll call it there. The stop loss I had on it was just above this range because that's the invalidation of, if we clear up here, we're messing around above the range, and so we might actually be gaining it. So I don't want to stick around in this short. And then the profit target, like I said, was down here. So turns out, hooray, this was a 4.73-to-1 ratio. But so that is to say that whatever I was risking, I should take enough profit on the first touchdown here to clear out this 4-to-1 ratio. So if I was risking $100, then this first profit target should have been a $400 locked in profit. And so that's a little bit why if I had actually followed all the rules, that's a little bit why you leave the trade on, because you've covered your bases. You've gotten what you needed, and the rest of the position, if needed, it could break even on a full return back to entry, and that's fine. Now, in this particular case, let's just keep going down the path of, if I was following all the rules, I would bring the stop loss down to the invalidation, and it looks like it probably would have hit. And what I mean by that is, if we get this out of here, once we made this move, there was a new invalidation of the trade, and it would be kind of this range here of, I'm just roughly charting this range, but it would be something like this. Once we hit down here, we don't want to, for the short thesis, we don't want to gain this yellow range here. We did, so I would have taken the profit here, pulled my stop loss down to the new invalidation, which would have been just above this range, and it looks like I would have got kissed here, and the whole thing would be closed, because this gain of this little range here is the potential for that reversal, the invalidation of the short thesis. And I mean, it still looks like that is the case. I mean, I hope, and I bet if we go down a little bit lower here to the 15-minute, I hope this looks familiar. If we clear all this stuff out of here, this little pattern here looks awfully familiar, because it doesn't matter what time frame you're on. We have this low, a new local low. We pumped up and gained it, and now we're coming back down to test if we can hold that range there. So in a roundabout way, that's kind of why, is because you can leave it open because you took what you came to take on the scalp move. And you certainly could. There's nothing wrong.
But you didn't do that, right?
Yeah, right. Yeah, this.
You keep okay.
Me personally, it's still open. I mean, I'll have to go back and do the math. I don't think I actually captured the 4-to-1, but I think I took 40% of the position off on this PT hit here. Okay. So, and I do not expect to ride this back to my entry. So I still need to bring my stop loss down. And I might actually now, like, I hadn't looked at this today because I was too busy with real work, but looking at this, I actually, when we're done recording here, I'll probably go close another 50% of it, because this does look pretty good for reversal off of here. But what you said, there's nothing wrong with taking 100%. I mean, just make that the plan from the beginning. The plan in that case is I just want to scalp this move, and then I want to step back and let's see what happens. And there's absolutely nothing wrong with that. You know, you might miss some opportunity in that case of, you know, you take all your profit there, and then maybe it drops down, and then you would want to wait for a repeat of that move, and you would want to short again here. So, you know, you're kind of technically missing out on this middle range here, but the trade-off of missing out is just having a higher probability, and there's absolutely nothing wrong with waiting for that higher probability of success by any means. So I don't know if that fully answers it, but that's my thought.
Yeah, it does. Yeah.
So we'll see. Maybe, you know, when you're watching this and the video goes live, maybe this thing exploded, and the 50% I closed as soon as this recording was done was very well taken in real time. Just made a trade.
We'll see. I'm pulling for AVAX to go the other way. So let's go to the moon, AVAX.
Yeah, it was fun to short, but yeah, the emotional bias bag still says, all right, I did my thing. Now go do your thing, and let's go back up to 60, 70 and more.
So that brings us to the end of this week's episode. I'm doing the premium selling thing. Viper is doing the price action thing, kind of practicing his reps, practicing my reps around earnings. I don't know how much more earnings are left. I'll probably have to take a screener to look in the future to see if there's anything more interesting coming up. Otherwise, hopefully you're finding interesting things to trade out there. Hopefully you get some paper trading accounts going, and you can practice your charting, practice your price action movements if that's the thing that excites you. I do think it is pretty cool and exciting once you kind of get some of it dialed in, and all these little lines and squiggles actually start to mean something other than squiggle lines that go up and down and all of that stuff. So it is pretty rewarding. I don't know, maybe it's kind of like the game of golf. People always tell me, I've never been good at golf, but people always tell me, oh, golf's really fun, like when you get good at it. And I'm like, yeah, it's not fun before that point, really. So maybe that's the same as price action, and practice away, and then you'll start to click and you'll start to get it. And you can combine that with a lot of different other strategies. It's like a nice foundational piece. So good luck out there. Hopefully you're finding something that you like to trade. Hopefully things are going your way in the directions and theses that you have laid out there. So have fun, good luck, and remember, think outside the block.